Indra. Yeah. I have one short question. Would you be interested in investing in another social media?
Would I be interested in investing in another social media? Without seeing the social media company, but even if I see it, right, social media is really, really hard. Again, if you look at the amounts pushed into social media before they start making money, the big ones, it's a lot of money. We're a small fry. So the chances of me investing in a social media company is almost zero. I've done that before too. I'm on the board of YY. I invested in a company called Plus in Shanghai. They're all doing, if you look at the NASDAQ numbers for YY, you see how nice a business it is once you're at scale. Right? I think YY throws off almost $1 billion in run rate right now in top line. And bottom line is probably about $100 million per quarter profits. Right? Huge. And the CAGR is about 106%. Huge company. That's if you get almost approximately half the people in China signed up. Right? I think there's something wrong with those numbers, but the MAU is about 100 million. How you get there? Totally different question. Right? How much money it takes to get there? Totally different question. Very hard. Very frankly, we're a small fund. We can't go after it.
Just wondering, I think it's an extension of that question. What do you find, what industry do you find sexy to invest in using for loss here?
That is not an investment criteria. Sexiness is not.
Since the topic is the beauty.
Beauty. Oh, beauty.
Yeah. What do you find attractive to invest in the Indonesian market for loss?
A clear-headed entrepreneur that is very resilient. Industry?
Yeah, industry.
I don't care.
Okay.
I don't care.
Even it's in e-commerce, no e-commerce.
No, I do look at e-commerce, but not in the tree-led sections.
Okay. And more questions? Done? Sweet. So I can ask some of my own questions. So yeah, maybe you can sit down. You've been standing up for quite a while. Yes. Okay. So a lot of my questions have been asked by the audience, but I guess one question that I should ask is, a lot of entrepreneurs have pitched to you. So what's the usual mistakes they do when pitching?
What's the mistakes of entrepreneurs when pitching? Again, back to that one word, clarity. Right? They're not clear on what they're trying to do it, right? And how they're trying to do it. So if you're pitching to me, you're probably looking for Series A funding. Right? Oh, by the way, we really hate people that don't read our FAQs and just say, hey, we have a seed company, would you like to invest? Okay, no, we don't hate, but we don't read the thing. So we put you on the blacklist, so when you're looking at Series A, we will not respond to you. I'm kidding. We forget it by the time. Anyway, the challenge is when you are going through your story from your perspective, right? When you're in sales, you always want to think about what the customer wants, not what you want to tell the customer. Right? So you need to be able to tell the story from your customer's perspective. In this case, it's me. Right? So what do I want to know? I want to know, number one, you have a big market. So first slide, big market. Here's the analysis. Here's the quotes. Second, number two, what do I want to know? You have a predictable sales model, right? How do you have a predictable? Here are the numbers. Here's the experiment we did, and here's the unit economic model. Here's the retention, the engagement, the virality, and so on and so forth. don't wait for me to ask those things. Right? Just show me. What's the third thing I want to know? That you are a clear-headed, resilient entrepreneur. So how do you show that? Right? With quotes from your previous bosses, previous colleagues, etc. Yeah, that's about it. Of course, you can describe what market you're going after, but that's almost just for your information. This is what we're doing. And I really don't care. Someone asks you. You could be selling insurance, you could be selling real estate. I just want to have an understanding, have a very clear-headed idea. I do care if you're not using tech, right? If you have no software in your system, in your business, then you probably won't invest. Right? Because I try to invest on creating value from bits, from knowledge, from information.
Next question. So, what companies have you invested in? Representing Mongsil in Indonesia?
We have invested in companies already, but we have not announced them.
So maybe announcing now?
And we're so company-centric that we are not going to announce them, we're going to let the company announce.
See, so, okay.
What kind of business?
Yeah.
What kind of business?
Yeah, give us a hint.
Industries.
Yeah.
So there are not that many companies in the particular segments we're in. So, I can only be very broad across ASEAN, right? There's some financial products companies. There is actually 2 of them. There's actually a real estate play, and there's a logistic.
Okay.
They're all bits centric. And the logistic ones actually have fleets to boot up. You might need atoms to boot up your system, but once you start running, the atoms should belong to somebody else.
And all of these companies, they target region Southeast Asia, or?
Yes, but they start with one particular city.
I see. Okay, so you've invested in a lot of companies, right? So maybe one question I have is that, because you've invested not only during your Mongsil time, but also when you were in China. So what kind of companies that you have invested and did not succeed? Like, what happened? These people are resilient. These people are smart. Clarity.
No, this is where we screw up, actually.
Oh.
Yeah, almost all our screw-ups have not been business model failures. They've been people judgment failures. So we made the wrong judgment on them. There's one guy I can think of, very smart guy, always acts like he's listening to you. Yes, I agree. You're absolutely right. Then he goes away and he ignores what you said. And next time you go, what's up? Oh no, yeah, and then it goes on and on and on. The company burned through about $60 million, and it's about to fall out.
Okay. So most of it is entrepreneurs.
In one case, the entrepreneur actually forged one of my partner's signatures. So, fortunately, this is China. So my partners know a lot of people. And they told them, look, if you don't give us back our investments, you're going to get in trouble. So, fortunately, there was a lot of upside in that investment, so we could actually get our money back. I'm trying to think of one where there was a business model investment error, but actually I can't think of almost all the screwed up things. Oh yeah, there's one. Everyone knows Xiaomi.
Yes.
So we thought that business was very interesting, like building a software platform for hardware. And we invested in the company, actually before Xiaomi, that was doing that. But the strategy was go work with Huawei and go work with all the different phone manufacturers and have them install our OS. And it turns out not to be correct. In fact, if you look at what Xiaomi did, it was the same thing, except at some point they realized it's not correct. They built their own hardware. We looked at the founders and the folks in the so we sold it. We still made money. So we didn't lose money, but it was like a 1.5x like that in about a year, which is good for for PE type returns, but it's nothing close to what we need as a venture.
I see. So how do you usually, again, you said that you have been with around entrepreneurs for a long time already, but how do you really judge entrepreneurs? Like, how do you really know that they're resilient? Can you give us tips, like 5 ways you know that this entrepreneur is good or not?
BuzzFeed, right?
Yeah.
Actually, it's very, very hard, to the point where I actually don't trust myself. It's hard enough, I don't trust myself. So I would have judgment. The negative ones are a bit easier. So this guy is kind of crazy. Okay, you're probably right. You can give him the benefit of the doubt. You can check a little bit more. But if you think he's crazy, you're probably right. But if you think he's good, right? He or she is good, doesn't mean that you're right. So one thing I do very, very diligently is reference checks. In fact, there are some funds in the US that before they invest in you, they run a deep background check. Private investigator, all that stuff. And so, and there's cases where the guy looks normal, and in the successful deals, everyone goes good, right? But then in this particular case, I found a bunch of guys that worked with him on a deal that blew up, right? And everyone said, "I'm never going to work with this guy." So depending on the situation, the guy might behave very differently. If everything's hunky-dory and successful, no complaints. Any problems with the deal, nobody likes him. So you need to have work with people, especially in difficult times. So obviously, I think that's
Right. This also applies to also group of founders, co-founders. So you also do private, again, background check to all co-founders and see how long they work together?
I do a lot of reference checks, yes. It's not so easy to do private investigations out here in Southeast Asia. It's different in every country. We actually look really good. So we tell the founders this is what we do, so it's not like a secret check. But so I've been fooled by enough people that I don't trust myself. In fact, I don't trust my partners or anybody else who thinks this guy's great. Right? I go, yeah, he's probably great. Let's check.
So now let's look at the portfolio, because again, you've invested in a lot of companies, a lot of pitches. Have there been some companies that you did not invest, but then they turned out to be awesome?
Yeah.
What happened?
So I'll tell you one where I got. So we were talking about this earlier, and this is what I call the anti-portfolio. Right? It's the deals that you saw that are really good, but you didn't invest. Right? So the VCs have this concept. Everyone has this concept called FOMO. Who knows what FOMO is? Fear of missing out. Fear of missing out, right? So if you're VC, you really need to avoid that, because it makes you do stupid things. Which means you are clear you're going to miss some very good deals. Right? So it's okay to miss it. In fact, we celebrate our anti-portfolio. Right? It's like we celebrate our failure, but we don't even look at it as failure. We just, oh, we missed that one. Okay. So I missed $2 billion deals, 2 multi-billion-dollar deals. The first one was a friend of mine, called Leo, that's introduced to another friend, Stanford MBA. He moved back to Beijing. I met him and said, hey, hi, what's going on? Oh, I just got my seed round. Would you like to invest? I said, no, I just came to say hi to you. So we talked and listened to his business. I think last year, a year before he went public, about $5 billion. He was, not anymore, but he was the youngest billionaire, self-made billionaire in China. He's like 31, 32, Liu Chen. Also used to be at Garena. So I missed that one totally. And he did ask a few more times after that. And e-commerce, well, yeah. He ran, the name of the company is Chime, and is selling cosmetics to women in large numbers. So that's one. The other one, I actually finally invested in it through one of my fund managers at approximately an $800 million valuation, when I could have done Series A, Series B, or Series C. Series C was already $200 million. The good news is it's now north of $1 billion, right? So I still am making some little bit of money. So this friend came to me, and again, another Stanford graduate in China, came to me and said, "We're starting this company. It looks like a Pinterest clone, but we only do beauty and fashion, and we're going to monetize much faster." So, middle-aged guy looking at this website for women, I don't understand this, so I passed on it. Series B came back to me and said, "Okay, let me run it by my partners." My partners were also middle-aged guys. Two others. I don't understand this. We passed on it. I think last year they were generating about $100 million in revenue, with like 80% margins, gross margins. Right? All they did was they used the UGC they produced on the website, view flow, to create CPAs through Taobao, and they were making lots of money from that. So that was my other miss. But I honestly didn't understand the market. I didn't understand what 20-something to 30-something-year-old women wanted from a website. Well, maybe I should have hired a woman to do this. And in fact, one of my assistants was saying, "This is a really good site." I'm like, "Okay, I don't understand." And sometimes things are not good. No regrets, just misses.
Any questions so far from the audience? No? I'll keep asking. So, when entrepreneurs want to raise funding, right? How do they get a hold of a VC? I mean, I think I've heard some VCs saying that they respect references more than cold emails, for example. So what do you think about that?
I think it's just as brave to send an email in. We do have email addresses you can send stuff to, and every one of them, someone will read it. I don't know how long we can keep up that because the volume is going up. But so far, we do. In fact, I think I'll probably just, if we need to hire someone, we'll just pay attention to this. But if you want our attention, the easiest way is to find a friend who knows us. And they can do, hey, let's go meet this one. Because our friends, they know if they keep showing us crappy deals, we'll stop meeting them. Right? So our friends, if they know us well enough to introduce a deal, will make sure your deal is sensible before they talk to us. So you get a filter right there that can help you think through your business.
So, as an entrepreneur, when you, on your own, raise funding, how do you choose, if you have the luxury to choose investors, how do you choose which one is good for you?
How do you choose which entrepreneur, or which investor is good for you? It's almost similar to why do you decide to work with this co-founder? Except you have to spend less time with the investors. If you make a mistake, actually sometimes the mistakes can be very painful with the wrong investment. But you use your gut. If it's negative, then you're probably right. If it's positive, then you are right.
I see.
Sorry to ask again. I just would like to know what was your most significant deal so far, and what was your insight before you actually made the deal, and I mean that made you actually did the deal. Thank you.
most of my most significant deal is not as a VC, it's as a founder. But my most significant VC deal is probably, there's more to come. I haven't been a VC that long. It's only about 5 years plus. So there are some deals that are going to become pretty big. But the biggest exit, I think the biggest exit, I'm not sure, is we sold a company of $1 billion last year. It's a game company. Our insight was, so this guy was going after non-English speaking, non-Chinese speaking markets for games, right? Which is wide open because nobody else was attacking this. Right? You go look at Singer, they're all English speaking. You look at the Chinese companies, they're all Chinese speaking. So they went for sort of the blue ocean. And this guy had built games before. So our thesis is very simple. We agree with him. If he can execute, we'll be one. He executed.
Any more questions?
Can you say it again?
How much the investment, the range of investment?
How much money do we have? So in the first investment tranche we made, it's about anywhere from 1.5 to 5 million.
Any more questions?
Just curious, as an entrepreneur, like, is there any like insight? What you wish you know when you now, as compared like you wish you knew at the beginning when you started? Is there any like insights you can share?
So the most successful entrepreneurs in my generation are people, they're not serial entrepreneurs. They only do one company, right? And they do it at scale, right? From Microsoft to Google to whatever, Oracle and so on. Right? They just do one company.
So it's focused.
It's extreme focus. So I'm a serial entrepreneur, not so lucky, right? Because every time you start, you bring it up here, and every time you start, you come back down here. And then you climb the mountain again. And then you come back down, you climb again. After a while, you're really tired of it.
That's why you become a VC.
Yeah. So I can watch other people climb and go. Was there a question somewhere?
Yeah.
Yeah.
My name is Felix. Just wondering, like you mentioned about you prefer the moving bits instead of moving items or goods, right? Like you prefer like a high-tech company instead of like maybe like e-commerce because it's moving a lot faster. Then what about if it's a combination of both? I mean, what about if it's like a, say for example, like a game company, then maybe kind of give like real gift, or maybe it's like a social media company but actually deliver something real or something like that.
By definition, tech company, internet tech company that moves bits, so you don't get away from moving bits. So everything we do, most of us here, in fact even clean tech, biotech, they move bits. Right? So my comment doesn't change. Right? If you move atoms, you're going to be slower and you're going to cost you more. It doesn't change. Thank you.
Any more questions?
What's the typical percentage of ownership we like to have? We typically like 25 to 30% for Series A. And again, that's modeled into our investment model. So the exits, we have certain returns and so on. So we try to top up every round after that so we can maintain our pro rata. I think it's, even that is not necessarily very true. For seed, I was going to say, I think it's true for seed. Because, well, we got an idea. But the due diligence is in the reference checks on your applicants. You better be very, very thorough. Is this guy going to creep it out? I've seen deals where they do it for 6 months, they raise $1 million, and do it for 6 months, and they, oh, here's 500,000 back, we're done, we're going back to Germany. So I think this is a real case, right? So how do you know these guys are not going to do these stupid things? So you look at their history, what they've done in the past. And the investors that don't do that, if they get lucky, okay, they get away with it. If they don't, they pay. We do deep due diligence, right? All the numbers you show us, you take it out. And you go behind, how do you get these numbers? How do you measure these numbers? Your accounts, your corporate structure, everything. So most of the time, when the company comes to us to get investments, it's the first time they get sort of a IPO grade check over. Right? We dig in like you were going to go public. It's actually not cheap for us to do that, but we do it because we're actually getting you ready for IPO. It's just a few more years now.
Anybody else?
So my name is Badar. I'm founder of the didnt.com. It's a crowdfunding website in Indonesia. So basically, what I want to ask, have you ever invested in Indonesian startup company? Because I mean, as a VC, how do you see it? Because in Indonesia, our environment is still not that good. So if we want to have a company that is, like you say, blue ocean strategy that we have to take from 0 to 1, it's still very hard because the environment and the ecosystem isn't supporting now. So I have heard one of the story. There is this guy who created some sort of ticketing website, but he did it very few years back before Ticket.com came, and he failed for that startup. But then after US did it first, and then Ticket.com copied that business model and then gave success. So how do you see it as easy to invest in startup in Indonesia, which is still copying basically?
So if the guys looking at China waited until China became very predictable and there's no fee question, this is the corporate structure, there's no anything, right? Everything looks hunky-dory. The valuations will be through the roof, it will be Silicon Valley. So you might as well just go to Silicon Valley and invest. Right? We are here because we believe in the emerging markets. Right? So there's a lot of negative things that come with that. Well, I won't even say negative things. The things you just have to accept that is the way it is, right? Why is every single Indonesian company that you invest in or want to invest in a Singapore company? It should be like that. You should be able to have an Indonesian company and invest in that. But if you look at the laws, you can't, right? You can't give options, you can't, there's a whole bunch of things you can't do. So we can wait until Indonesia fixes that problem, or we can find a workaround and just work, right? As entrepreneurs, you don't have the luxury to wait for the world to change. You change the world. So that's how I look at the emerging markets. It's not even negative things, it's just accepting the world as it is and trying to figure out ways to work with it. And therefore, your value systems, your purpose and all that becomes very important. You need to be very centered because in China, for example, you can see a lot of people just drift off to the wrong side. And I'll venture to guess in the traditional businesses here as well. One thing you mentioned that I want to caution you on is Peter Thiel's thinking. His book is very popular. Right? He invests in the 0 to 1 deals. Right? He doesn't do the N+1. And so if you think about his personal self-interest, he wants to see more 0 to 1 type of deals. But if you ask yourself, how many 0 to 1 type of deals actually become 1 instead of staying at 0? Right? I would say most of them stay at 0. So I actually think that for emerging markets, the bulk of what we focus on should be the N+1. why, if you're about building value in the economy, right, and someone already invented a wheel, right, why don't you take the wheel and put a cart to it and push it around instead? Why go think about how do I invent this round thing that can spin? It's already been done, right? Take that and innovate on top of it. So, real estate portals, right? Everywhere around the world, the top real estate portal in the country typically does not belong to the Silicon Valley. It's a local company, right? Germany, England, here, elsewhere. So you know there's going to be a billion-dollar company created in that space. Are you going to be it, or is it going to be somebody else? It doesn't matter. Right? So why do you want to innovate in a way that Silicon Valley innovates? The Silicon Valley companies don't have a choice. Right? They want to do a real estate company, well, it's already a public company worth $5 billion. Right? Can't do it. Right? You can build a billion-dollar company here doing that. That company's doing it already. Or something else that has not been done here in Southeast Asia. So there's a really dumb question that always gets asked by Silicon Valley people. Right? Can China innovate? Right? And I look at them and go, what do you mean? They're creating how many billions, hundreds of billions, trillions of dollars of market cap, and you're asking a stupid question. I mean, what do you mean? Right? So think about what you think about when you tell yourself innovate or innovation. Right? I think most of us, because we get brought up on Silicon Valley stories, would think about innovation from the point of view of Silicon Valley. Right? And that's great, but we're not Silicon Valley, we're not the US. And that innovation could apply to us. And there are a few companies around that do that kind of global kind of innovation in ASEAN, right? But there's so many more easier fish in the ocean to catch, right?
Interesting. So if I can add one up, so do you think if do you think it looks more interesting if a startup has an entity in Singapore instead for VCs?
No, the example in Singapore company being the headquarters is not even a question anymore, right? Because you just cannot give up, for example, stock options in an Indonesian company to someone from the US or somewhere else. Or in fact, to Indonesians, it's you got to go through approvals and all that. So the model that we create for incentives in tech innovation is not usable in Indonesia, in Philippines, in Thailand, in Vietnam. So they all end up in Singapore. In fact, in India, the Indian companies are becoming Singapore companies. Singapore just got lucky and nothing to protect. So come in, everyone comes in, and you can take your money out in any time. Okay, it's fine. So it's easy to create. You either do a Singapore company or a Cayman Island. Singapore is much more real. You go there and talk to your accountant, so most people end up with Singapore companies.
I see the Cayman Island startups are more hipster.
You get to go to Cayman. Actually, I've had probably a dozen Cayman Island companies. I've never been to the Cayman Islands. Yeah, it is. I hope the government changes these things soon, because it just doesn't make sense to me. But my job here is not to try and make sense of policies that were passed down from 50 years ago. My job is trying to push the ecosystem forward.
Hello, my name is Sony. It's interesting that you mentioned the Cayman Island and Singapore. What about Delaware Corporation?
No, you don't want to make your company a U.S. company because U.S. has global taxes, right? Unless you're already a U.S. company. But even then, the one thing I always worry about as a U.S. investor also is that every few years they threaten, if you're a U.S. citizen, you have global taxes. So every year, no matter where you make your money, you're going to pay 1% tax. Right? But as a company, you can leave your money in Ireland or Singapore or somewhere, and you don't have to pay taxes on it. A U.S. company. every few years they'd say, well, maybe we should make that payment. So just because you registered your company in Delaware, and all your operations here, your business is here, you are paying US taxes. US corporate taxes are 50%, right, at the high end, right, including the state tax. You want to do that? Go ahead.
Yeah. More questions? No? Okay, so you mentioned earlier on that sometimes choosing investors could, even having an investor on board could go wrong. What's the worst case happening with choosing the wrong investors?
I myself have been involved as an entrepreneur, getting the wrong investor. And I've seen multiple entrepreneurs struggle through this. There's two levels of headaches you can get with the wrong investor. The most critical level is one of rights. Right? Investors have a lot of rights. If you give them your stock certificates and you look at the shareholder agreements, there's a whole bunch of rights they ask for. So they can block you from going public if they have enough shares. They can block you from buying equipment. They can block you from a lot of things. They can block you from hiring a CEO or a VP. So that's the first level of it that you can come up with. The second level sometimes is even worse. Is basically the guy is a pain. He keeps asking you for, give me this report, give me that report, and why is this? Why are your revenues? He's not a very experienced executive, but yet he wants to know everything. Those are sometimes worse than the ones that block you. Because when they block you, they know what they're doing. So they may have some logic to it. I'm just trying to figure out if I'm going to
It's okay, just give one example.
No. In high level, you understand the challenges. It is when you get into disagreements, how do you end up resolving the disagreements? Are you adults about it, or you fight like kids? You want to avoid people that fight like kids.
So even from startup's point of view, we need to do also due diligence on investors.
Yes.
The profile. Okay. We don't have too many questions. You guys? Okay, so I think one of the last questions I have is about experiment. You mentioned about startups may want to get some money to do the experiment and to find out if it's working or not. So when do you decide whether you want to do it with strap load or whether you want to do it with funding, for example? What's the pros and cons in starting up with the funding?
The biggest pro of getting external funding, seed funding,
Yeah.
is that somebody else validates that you have a reasonable idea. Right? Sometimes you're so in love with your idea, you think this has to work, and you say, okay, I've got my life savings of $500,000 I'm going to put in, right? And then a friend walks up and says, what a stupid idea, what if you do this, it'll break. And you go, oh, right? You just lost $500,000. So get someone, trust people enough to let them criticize your models. So that's I would 100% get that if this was your first time. Yeah. If you've done startups before, then you understand how to get feedback. So go get your feedback in other ways and get funding yourself if you want. It's all an issue of risk management.
Okay. So, yeah.
Hi, again. Yeah, the first question is that as an entrepreneur, when and how can you find out that your current strategy is not working? And the second one, as an investor, how long do you give a startup until it can pay you back from IPO or sale?
First question is, depends on what the experiment is. Right? You created the experiment, right? So you know what numbers you're measuring, you know what a successful experiment is and what a failed experiment is. If you cannot get those successful numbers, it's failed. Right? Or actually the numbers for the failure mode all show up. It's failed. Right? So a seed investor is very clear. They want to pay you to go run that experiment. Hopefully it works. If it doesn't work, we shut it down, I lose my money. Right? That's a seed investor. So that's that. What's the second question?
How long do you give a startup?
How long do I give? So when I put my money in a startup, the only time I'll demand it back is if I end up not trusting the entrepreneur. But even that is really, really hard because if you look at the shareholders agreement, SHA, there's almost no way to get the money back. Right? The only way actually is to liquidate the company, but we are minority shareholders. We at most own 25% of the company. We cannot force a liquidation. So the way I look at it, once I put my money in there, it's gone. Right? It's going to come back in a part of a big company, or it's not going to come back. Right? So how long it takes? However long it takes. We hope at some point we're not going to get it back, we can write it off. But there are some companies that refuse to die and keep going and going and going, and we go, okay, what do we do? We try to sell them, but sometimes the entrepreneurs are having fun, so we can't sell them. So there's, we don't have that much control. VCs are at the mercy of the entrepreneurs once the money goes in.
Hi, my name is Nico. I'm a game designer. So currently, me and my friend are doing few prototypes for games. What do you think about game studio that just starting out and doesn't have like a real game portfolio? Because game is quite different from like apps. You cannot launch the prototype because it will be in very bad state. And to develop it, you can market it. Especially today, you need quite a lot of fun actually. So what do you think about that?
Doing a startup is hard. What can I tell you? First of all, game studios are very hard to invest in. Typically, we only invest in those that actually work for other people within game studios. So that you know this guy knows how to do it. Because to learn to build a game studio from scratch is really, really hard, and you pay a lot of tuition fees to do that process. So if you want to do a game startup, make sure you join a successful game startup first. Right? And you understand how, what we found, we've been actually talking to almost all of the game companies in Jakarta. And what we found is that the understanding on how to market games globally is actually very low. I mean, you've got a lot of talent to build the games, but how to sell it? How do you sell it in Korea, in Japan? And you cannot build a large company if you have no idea. And that's why one of the things I'm trying to do is actually forming a group of ASEAN citizens, Singaporeans, Indonesians, Filipinos, in the Bay Area. And there's the Singaporean group is already 160 startup guys. These are just startup guys. And Indonesians and so on. And what I'm trying to do is match them with people here so that they can help them do some of this training. Some of these guys are going to come back. One of the secret sources of success in China is that these sea turtles is what they call it. They swim out to the US and then they swim back. Come back to China with a lot of expertise to help build companies there. So I expect that to be happening with our people. In the meantime, startups are
If I can add, actually I worked with a few big company and few startups also for games. So
you know how to market games in Japan and
if
Korea and China? If you do, then it becomes easier.
yeah, I'm more expert in developing the games, not yet on the marketing.
Yeah. So you have one side of the equation, how to build it. In startups, I always say, you either make stuff or you sell stuff. If you don't do one or the other, you better look for another job. Right? So you got one of them.
You mentioned earlier about bad investors, the signs of bad investors. How about like, what is good investors? What are the ones that we should seek for? What is the signs? Other than
So if you look at the valley, Silicon Valley, it tells you what's going on. Every single new VC in the top VC firms in the valley are entrepreneurs that created hundreds of millions or billions of dollars of market cap. So basically, what the valley is discovering is that you have to be an entrepreneur in business. I think a lot of my colleagues in this business are in Southeast Asia, and they don't have to have built big companies. Sometimes my partners have built big companies. And it's still okay to do that. But I think in a few years, it's going to get tougher and tougher if you haven't become a VC and want to become a VC and cannot build a startup.
is there any like specific maybe like give you more freedom or take lesser?
It's just that entrepreneurs know your pain.
Oh, okay.
Yes. It's very simple.
So get an investor that wasn't an entrepreneur.
Yeah, but that's pretty self-serving for our view.
Yeah, so just two more questions and we wrap this up. There's this, what do you think about profit and growth? Does it come hand in hand, or do you prefer growth over profit?
Yes, it goes hand in hand. If you're growing at the expense of profit, then it must be very clear how you switch back profit. Amazon, actually, if you guys are too young. When they first went public, the first few years, they were burning through lots of cash. And then when they were at .com bust, and then they were at 1.5 billion in revenues, the investors were demanding profitability. So these will say, well, let me show you. You twiddle some dials and became profitable. And then after that, say, okay, I've shown you, let me go build a company. So if you want to grow at the expense of the bottom line, then you need to show me all reasonable vulnerabilities that you have control. Anytime you don't like it, you just switch it off, switch off the burn, and go off. If you cannot do that, you should be doing that.
Interesting. So maybe one last question is advice. One advice you would give to entrepreneurs in Indonesia? You said many advice.
What? This is going to sound like beating a dead horse, but be very clear and be very resilient.
Thank you very much.
And I think there is one message from Tech in Asia. I'd like, okay. Yeah. And for the feedback form, please give it to our staff, or probably on your way out. Like there's a desk there, you can just put it down. And if you have any question about Angin, you can talk to me, or you can send us an email at angin@gepi.co.
Right. Thank you. Hopefully everyone already know Tech in Asia. We are a media company. We write news. This is our ID side. And we also have international side. which just an hour ago that we announced Rocket Internet calculating that it's 25 million. So basically, this is what we're doing. We are becoming the media that give the exposure for the tech ecosystem in Asia. Now, besides the online engagement that we do, we also do a conference, which name is Tech in Asia Conference, or previously known as Startup Asia. Yes, we changed the brand. Now it's Tech in Asia Conference. It will happen in Singapore, 6 and 7, which for this year, for everyone that I didn't know Startup Asia, or last year you might attend Startup Asia, usually we sell booth for startup to exhibit. But for this year, we give it for free. So, yeah. Wow. Not yet. You still need to buy the pass to come in, but the exhibition cost is free. Right. So yeah, the Bootstrap Alley is free. There will be also a Bootstrap Alley tour, or actually the name is Tech in Asia Tour, and it will come across to 10 cities, and the Bootstrap Alley tour will go to Jakarta in the 2nd of March. Will be 2nd of March, right? Bootstrap Alley tour. This is a 10 city search in Asia for the best startup. So the opportunity is to pitch to actual investor. We got four investor representing VC, 7 Jung, bank partner in Montreal. We also have Andy Budiman from IdeaSource, Kwan Su from Green Venture, and Mark from GoBees, right? There is also one-on-one virtual pitch training for the top 5 startups that got chosen to pitch. There will be a one-on-one training with team from Tech in Asia, and yeah, this is the free stuff. If you guys win the pitch tournament, we will pay for your flight, accommodation, and 2 startup pass, and also a booth in in Tech in Asia Conference, Singapore, for free. So, if you guys are interested, these are the details of the event. Apply to pitch. We extend the deadline until 20 February, so you still can apply for now if you guys are interested. The announcement will be on the 23rd. And if you guys are not interested to pitch, but you guys want to come, the event will be on Jakarta Digital Valley on 2nd of March, 6:30 until 9:30 p.m. All this information you can access on dat.techinasia.com. Yeah, and last, if you guys are interested to apply, looking for a fundraise, probably this is the chance. Thank you very much.
Okay, thank you very much. I think that will be all for today. Thank you again to Peng and to Rico. And if you have take care of your garbage, please put it on the side. There is some garbage trash there. And thank you very much for attending. If you'd like to mingle or to share whatever your stories or you want to talk to Peng, sure, please do.